Intercompany, a favorite phrase for accountants across the globe. I'm sure, if you're an organization where intercompany is a challenge, it's one of the areas that you can spend the most amount of time in your sort of month-end financial close process. Today, in our video, in our ongoing series related to Blackline, we're going to focus in on how Blackline can assist on your intercompany processes. I'm going to take you through the story of the sort of most frequent scenarios we see. Today, we're going to call that Company 1 and Company 2, and how, depending on which company is most like your organization, how Blackline can help facilitate a faster close and less of a pain points related to intercompany. So let's jump in and have a look. All right. So as I mentioned, we're going to talk about the tale of two companies. And I'm not very, very creative. Like I said, retired auditor. Auditors are too creative, very by the book. So the first company we're going to talk about is called Company 1. So Company 1 is every accountant's favorite company. You'd rather be Company 1 than Company 2, we're going to talk about in a second here. So the story for Company 1 is a single ERP, multiple entities within that ERP. And lucky enough that they have forced two-side posting between entities. What I mean by that is if I've got a transaction between entity A and entity B within Company 1, when I post one side of it within my ERP, forces that posting on the second. So that's great news when it comes to month end or year end, because that means that, because I've had that forced transaction posting between those different accounts, values should offset in accounts that are, have a relationship between one another. So if I've got a receivable in entity A and a payable in entity B because of this forced posting, those balances should net to zero. So from a Blackline perspective, in the account reconciliation solution, which is used for your balance sheet reconciliations, we've got that functionality for account grouping. And account grouping allows you to reconcile multiple accounts at once. So if you're doing something like fixed assets, you group all your asset accounts together. But you can also use it for these accounts that are meant to offset. So I'd take that receivable between entity A, payable between entity B. I'd be able to put that in a single group within Blackline, and even if they're in different functional currencies, we're bringing in month-end spot rates, so Blackline will do that conversion. And we've got an auto-certification rule within Blackline that basically says if those balances offset below a threshold, then that threshold, once those balances net off, we're going to say no one actually needs to look at this at the end of the month. So we provide thousands of account pairings, they would all auto-certify within Blackline, and my intercompany process would be, all cleaned up. Now, let's talk about Company 2. So, like I said, Company 2 is a little bit more of a problem child than Company 1. So the story here is either multiple ERPs, so we're using different ERPs across different companies within the group, or no forced hosting cross-entity, which means that if I'm the accountant within entity A and I record a transaction, I don't post that entry directly into Company B. I'm reliant on someone on Company B side to either, record an intercompany invoice the same way or read the email properly or agree with, whatever the intercompany charge might be. So if you think of the solution we used for Company 1 there, it's not going to work for Company 2, because at the end of the month, your accounts that should offset aren't actually going to offset. And since they don't offset, someone's got to go in and investigate what's the difference. Who's recorded something differently or not recorded something at all. This is where Blackline's transaction matching capability comes in. So Blackline's transaction matching, all about matching data. In some of the other videos in our series, we've covered different use cases for it. One of the most common use cases we'll see is for Company 2 style intercompany problems, where rather than just bringing in the balances of accounts that are meant to offset, we can bring in all the actual underlying transactional detail that underpins those balances between those two different entities. And so what that means is that we've now got the detail in there, and we can create rules to match everything off at a transactional level. And so anytime you can define a consistent business logic in terms of how things should offset, we can create a rule, tick and tie everything that agrees, and the person working on the match set would then just be left with what the exceptions are. And those exceptions are those transactions that now, require some sort of action. So maybe it's something where, the same invoice has been captured, but they're at different amounts. Maybe it's missed transactions, whatever it might be. We can identify those exceptions very quickly within Blackline, and we can even eventually set Blackline up to push any adjustments required out of that exercise direct back into your ERP, close it all off. So no matter which side of the coin you're on, company 1 or company 2, Blackline's got an intercompany solution for you. Pretty good ride. Thanks very much.